if I have the net figure, gross dividends, how do I get the gross dividends? That will be net dividend, and then you say times 100/85. So the gross is 85%, the net is 85%, and the gross is 100%. So when I have the net figure and I want the gross, I'll say the gross dividends is net dividends times 100/85. Is that understood, Tim? Is that understood? So whenever we are subjecting these dividends to further taxation, we subject them at gross figure. Evans ameelewa. What about Brian? Brian, have you understood? Meshach, Liz, Lillian, Jojo, and Otito. All of us, are we together? If you're together, you give me a yes. Kindly. Perfect. So examples of non-qualifying. So call it dividends. We say from cooperative society. We call it other than, we say the SACCOs. So dividends from cooperative society, and you say other than SACCOs. We say that dividends from cooperative society other than the SACCOs are together. So examples of non-qualifying dividends, look up the one, dividends from cooperative society other than SACCOs. In an exam, how will you see it? You just say, we can be told Wakali Cooperative Society. So when you say dividends from cooperative society other than SACCOs, if that is understood, nipatie yes. Example of non-qualifying. Provide me the yes. Perfect. So then I proceed to what we call the interest. We call the next interest income. So number one is to define what is an interest income. So interest is basically money paid. You say money paid, and then you say for money borrowed. So when you talk about interest, this is basically money that is paid for money borrowed. Then we move for tax purposes. They're divided into three. So for tax purposes, they're basically divided into three. So we have what's called interest. We call it interest income. Exempted from tax. Interest income, we say exempted from tax. Then we have the next, we call it qualifying interest. And the third one, we call it the non-qualifying interest. So we have what's called the qualifying interest, non-qualifying interest, and then we have interest exempted from tax. So I want to start with the first one. So that is interest exempted from tax. So we say interest exempted from tax. When you say exempted from tax, what do we mean? When you say interest exempted from tax. So when you say interest exempted from tax, we say not charged tax at all. Not charged tax. When you say interest exempted from tax, we say that these are interest income, not charged tax at all. Together, Lillian. So then I proceed to example. Lillian, are we together? Examples. Perfect if you're together. So interest from abroad. But what we call it interest. Interest, we call it from abroad. So interest from abroad. So interest income from abroad is exempted from tax. We don't charge the tax. They say interest from OSP. HOSP is Home Ownership Saving Plan. Interest from HOSP. OBS scheme. Say up to 10 million. Interest from OSP, Home Ownership Saving Plan, up to 3 million, sorry. Up to 3 million. Interest from OSP scheme up to 3 million for the first 10 years of the scheme. We say for the first 10 years, we say for the scheme. For the first 10 years of the scheme. For the first 10 years of the scheme. Interest from Home Ownership Saving Plan, that is for the first 10 years of the scheme. The next we say interest from Housing Development Bond. Interest, we say from what we call housing. We say development bond. We say up to 300,000. So up to 300,000. Interest from Housing Development Bond up to 300,000 per annum. Are we together? So if you have interest from Housing Development Bond, it's 400. How much are we going to tax? If you receive interest from Housing Development Bond, 400,000. How much are you going to tax? Emma, how much are you going to tax? 100. Not 100, up to 300. The first 300 is exempted. That should be 100. Together on Tito. Together. Government treasury bills and bond. We have government interest from government treasury bills, and say in bonds, and say for non-resident. Government treasury bills and bond, and say for the non-resident. So if non-resident basically take treasury bills and bond, those ones are exempted from tax altogether. So we have interest from a registered pension scheme. Interest, call it from what you call a registered pension scheme. Is that understood? Interest from a registered pension scheme. Tuko pamoja. Are we together? What about infrastructure bonds? What about infrastructure bonds? Interest from infrastructure bond. Infrastructure bonds. What about infrastructure bonds? These are long-term bonds. Are they exempted from tax? Infrastructure bonds. Infrastructure bonds, those are still exempted from tax. Together, team. That is still exempted from tax. For those who invest in bonds, infrastructure bonds, the beauty of it, they're long-term and they're exempted from tax. Together, team. I want a yes if you're together. Infrastructure bonds, those are also exempted from tax. Perfect. So then we go to what's called qualifying interest. Qualifying, call it interest. So whenever we talk about qualifying interest, we say that interest where withholding tax, WHT, withholding tax of 15% is final. So we're basically saying that the withholding tax of 15% is final. So once the withholding tax of 15% has been deducted, you don't subject it to further taxation. Are we together? Not subjected. We say not subjected. We say not subjected to what we call further taxation. So these ones are not exempted from further taxation. Once the 15% withholding tax has been deducted, we do not subject it to further taxation. Then I proceed to example. Number one, I call it interest. Look at the word. Interest received. We say received we say from SACCOs. Interest that are received from some SACCOs. Interest that are received from some SACCOs altogether. So interest received by resident, we say interest received. Look at the by residents, and you call it from what you call from treasury, bills and bonds. Interest received by resident from treasury bills and bonds. Those are qualifying. For those who have invested in treasury bills and bonds, you can confirm that. Cindy, can you confirm for those who have invested in treasury bills and bonds? That is true. Once the 15% withholding tax has been deducted, we don't subject it to further taxation. Are we together? And lastly, mark this. Interest received by individuals from banks and insurance companies. So lastly, we have interest, we say received by individuals, we call it individuals, from banks, and what's called an insurance company. So interests that are received by individuals from banks and insurance company, mark the word individual. Don't forget that. If an individual receives interest from the bank or insurance company, the 15% withholding tax is final. So those are the categories. Understood? I've said individual. Perfect. Is that understood? Emma, Evans, Ontito, Emma Nyokabi, Jojo, Lillian, Margaret, I hope we are true. So the last category, we call it non-qualifying. We have it interest. Non-qualifying interest. So for the non-qualifying interest, we say that the 15% withholding tax is not final. We say 15% withholding tax, WHT means withholding tax, is not withholding tax, we say from the source is not final tax. So the 15% withholding tax from the source is not final tax. Implying we're still subjected, we say subjected to further taxation. We're still subjected to what we call further taxation. We're still subjected to what we call further taxation. So the 15% withholding tax is not final tax. We're still subjected to further taxation. Are we together? So the recipient is still being subjected to further taxation. So category, we have A, and then we have B. So we have A, we have B. So say interest, we have it interest received by individuals, interest received by individuals. We call it from other individuals. Mark the word other individuals. Interest received by individuals from other individuals. Limited companies. Limited companies. And cooperative societies other than SACCOs. Cooperative societies, call it other than SACCOs. Is that understood? Interest received by individuals from other individuals. Then you say limited companies and cooperative societies other than SACCOs. Give me a yes if you're together. Give me a yes. Then the second you say interest received We say by limited company, interest that is received by a limited company from banks. Now, when you talk about banks, from banks, get the difference. Students always forget this. If an individual receives interest from a bank that is qualified, are we together? Nasir and Alan, I hope you're getting me. Students always confuse this. If an individual receives interest from a bank, that is qualified, fine. However, if a company, a limited company, receives interest from a bank, then that is non-qualified. So from banks, insurance company, insurance, we have individuals, other limited companies, and what's called cooperative, societies, they, other than SACCOs, cooperative societies, and you say other than SACCOs. Is that understood? If that is understood, you give me a yes. Is that understood, Jojo? Jojo, if that is understood, you give me yes. Perfect. Jojo, have you understood? Liz, have you understood that? Yes, a question. Ask. Proceed. The floor is yours. You can ask. Kindly proceed and ask. Meshach, all ears on you. Do you need to speak or do you need to type? Which is the way? Do you need to speak or you type? You can type your question. Meshach, can you type your question or do you need to speak? Do you need to speak or type it? Just type it then. Very fast, Meshach. Kindly. I have two concepts to discuss, then I get to question. I want to do the last sitting paper. That is August 2025 paper. Kindly. So type, then we take it over. Interest received from SACCO is qualifying. I'm saying interest received from SACCOs is qualifying. The 15% withholding tax is final. Look up. Interest, qualifying interest. The 15% withholding tax is final, not subject to further taxation. Once the recipient has been deducted 15%, then that's final. Example, interest received from SACCOs. I've said interest received from cooperative, that is non-qualified. Meshach, is that understood? Meshach, is that understood? Perfect. So when I talk about rental, royalty income, they're not the same. I'm just consultancy, and what you call professional. Call it professional fee, and what you call the professional fee. So we have what you call royalty income, we have what you call the consultancy, and then we have what you call professional fee. These things are not the same. Evans, these things are not the same. Royalty is different from professional fee, and it's different from what we call consultancy. Whenever we talk about royalty income, these are basically received for what you call for patent. These are incomes that are received for patent. They're received for copyrights and trademarks. For copyright, and what you call the trademark together, like the musicians are together. Royalty. You remember the musicians? Copyrights. For those who are playing music in their business, you need to pay for that. So that is called royalty. But I'm saying it's not the same as professional. Though in terms of taxation, we basically tax them the same. I've said royalty is what is strange, but we say this is income that is received for what we call patent, received for copyright, and received for trademark. Understood. But in terms of taxation, we tax them the same. Those are different things, but we tax them the same. Understood. Yes, it's very important, Tafari. I don't want to teach myself. You respond. Perfect. Thank you. Are we together? The only thing that is strange is royalty. But I've said this is income that is received for what we call patents. Are we together? Copyrights and trademark. Like the musicians, when you play their music, there is copyright board. You pay it. Are we together? So that such money is called royalty income. So in terms of taxation, we basically classify them into two. We have non-resident in terms of taxation. Then we have what we call resident. So in terms of taxation, when we talk about royalty, consultancy, and professional fee, we divide them into two. So I want to start with the first one, that is non-resident. And right now, tax people, you know who is a non-resident? Who is a non-resident? Is that true? Together, you know who is a non-resident. So in terms of non-resident, now for the royalty, for the consultancy, and for the professional fee, how do you tax them? We basically understand that withholding tax at source of what we call 20%, at source of 20%, withholding tax at source of 20%, we say is final. Together. If you're non-resident and you have a royalty income or you have consultancies to what we call professional fee, the withholding tax of 20% from the source is final. The withholding tax at source of 20% is final. Are we together? Is final tax. When you say final tax, it just means that not subjected to further taxation. Basically, not subjected to what we call further taxation. Not subjected to what we call further taxation. It is not subjected to further taxation. Then we'll have the last category. That is for the resident. We have the last category. That is for the resident. Together. That is resident. Give me a yes if you're together. So for the non-resident, we're saying that the withholding tax of 5%, withholding tax of what they call 5% at the source is not final. Is not final. I know in this class, the people who have done consultancy, are we together? The people who have done consultancy. What happens when you do a consultancy or you receive a professional fee? You will be deducted 5% altogether. But you're saying that this 5% from the source is not final. Not final means that we're still subjected to further taxation. Still subjected. We say to further taxation. This is still subjected to what we call further taxation. It basically implies that we're still subjected to further taxation. So how do we subject it to further taxation? So we basically subject what we call the net income. We subject what we call the net income to further taxation. We subject what? The net income to further taxation. We subject the net income to further taxation. So the question is, what is net income? So allow me to tell you what net income is. So when you say net income, is basically what's called the gross income. You say minus allowable. Call it allowable expenses. Minus the allowable expenses. Minus the allowable expenses. Together. For example, we say marking your papers is treated as a professional course altogether. If you mark your papers, for example, it will be treated as a professional fee. So meaning if probably you earn, let's say 100,000, what will happen when you're receiving that money? You're going to receive 95. The 5% will be deducted. When I'm going to do my end year tax, what I do, I have the gross income, meaning 100 that I received altogether. I have the gross income. I will say when I go to marking, maybe I travel from maybe, somewhere I was not in Nairobi. I had subsistence allowance. I had the transport expenses. I had stationary expenses and etc. So you're basically saying the gross income that you received and allowable expenses. To imply something that a concept that we're going to do ahead as we discuss the business income, the expenses in taxation that we don't allow. For example, if I take my family for an holiday and I say that was an expense, do you think the taxman will agree? Natalie, do you think the taxman will agree with me? The taxman is not going to agree with me. That's why in tax, we're very keen on allowable expense. So if you want to deduct any expense, you must ask the question, the logic and the sense. Is this allowable expense? So that is what gives us the net income. So this net income is subjected to further taxation. What is subjected to further taxation is this net income. Are we together? Subjected to taxation on what? On a graduated scale. Added to other taxpayers' income, we need to know added to what we call to other taxpayers' income, and you say and subjected to what we call to further taxation. If you had employment income, you were also employed, it will be added. Okay? So the thing about it, the last point that you need to understand on this, we remember this will be subjected because you're endeavoring at a graduated scale. Together. It will be subjected at a graduated scale. So a good student will ask me, Molimo, what about that withholding that was deducted at source? You need to remember the withholding tax, we say at source, you already paid something at the source. The withholding tax at source will then be deducted, at the actual tax payable. Will then be deducted at the actual tax payable. Understood? Will then be deducted at the actual tax payable. Tumelewana. Perfect. When people talk about tax credit, do you remember these tax credits? And I said withholding tax at source, where withholding tax is not final tax. Do you remember this one? Withholding tax at source, where withholding tax is not final tax. Example, I've said, for a resident individual who is receiving consultancy income, professional income, or royalty income. I hope that is understood. Liz, is that understood? CPA Liz? CPA Liz, is that understood? CPA Liz, is that understood? Awiko Dangote, is that understood? If that is understood, you give me a yes. If not understood, you ask Walimu to expand on that. Perfect. So then I proceed. Thank you. I proceed to the last one that I want to discuss, and that is the rental income. I proceed to the last, and that is what's called the rental income. I proceed to the last and call that rental income. Rental income is income received from renting what's called a property. Income, call it income. We say received, and we say from, we say renting what's called a property. Received from renting what we call a property. So what is a property? We'll definitely say IE, call it building. Building is an example of property. So this is income that is basically received from renting a property. Tuko pamoja. We respond to this. In terms of taxation, again, we need to classify them. Non-resident, we have the non-resident, and then we have what we call the resident. We have resident, and then we have the non-resident. Yes. And the logic behind being detailed is that you don't want just to pass exam. You also want to be students who can apply the knowledge. Sindio, Abdina said, do you just want to pass, or do you also want the knowledge to stick with you? The reason why sometimes we teach detailed is for you also to use this knowledge. Are we together? The essence is not just passing out together. So that when you go out, or you have your small consultancy, you can basically advise somebody. Even at this level, you can carry out, consultancy, just advise people about tax. That's why we teach that. So then I proceed to the non-resident and how we go about it. So we have what's called the non-resident. So for the non-resident, in terms of rental income, subject to withholding tax of 30%, subjected to what we call withholding tax of 30% of the gross rental income, So if you're a non-resident, we simply slash 15% withholding tax on the gross rental. So when you say gross rental, this is before, we say before deducting. It means before deducting expenses. So when I say gross rental, that is before deducting what we call expenses. Are we together? But the last one, this is final tax. Implying that if you're a non-resident and we've slashed 30%, if you're non-resident and we've slashed 30% on the gross, and I've said that the gross basically implies that before deducting the expense, this will be final tax, meaning once that has taken, you're not subjected to further taxation. Then the last part of it, as we get to the August question, we have the resident. In terms of resident, look up team. In terms of resident, they are taxed as follows. Are we together? They are taxed as follows. So when it comes to resident, there are two concepts. We have the first concept, we call it residential. The first concept is what's called the residential. The first concept is residential. Together. The first concept is basically on residential together. So on residential, and you talk about residential, number one, residential that make residential are houses, people just living. There's no commercial activity. Together, team. Are we together? Residential, these are houses where people are living and there's not any commercial activity. So we basically say for residential that make 24,000 per month, stroke and below, 288 per annum, look up, and 288 per annum, and below, we say are exempted from what they call from tax. So if you have a landlord, you have your own three houses. Somebody is paying you 3K a month. 3K a month. That totals in a month, that is 9,000. Should you be subjected to tax for that residential? Emma, you have your small 3 houses, and in these 3 houses, you're charging your tenants 3,000. You have 3 tenants. Should you be subjected to tax on those residential? So you're basically saying that if you have residential that make 288 and below per month, and 224,000 and below per month, and 288 and below per annum, those ones should be exempted from tax. Are we together? That is the first category. The second, I'm basically talking about residential. I have what you call residential. I have residential. I have residential. I have residential. Residential that make above, say above 288, above 288 per annum, say up to 15 million. So look at, we have the second category. These are residential that are making between over 288 per annum to 15 million per annum. They are subjected to withholding tax of 7.5%, withholding of 7.5%, 5% on what's called on the gross rent. So if you have a tenant residential, but these people are making over 288,000 to 15 million, then they should be subjected to withholding tax of 7.5% on the gross rent. Tuko pamoja, 7.5% on the gross rent. Are we together? Respond with a yes. I need you. I cannot do anything without you. Yes. Perfect. Then they should be paying. This one was effective. Remember, this was effective. We say effective 1st January 2024. This was effective January 1st January 2024. It was, what was it before this? It was 10%. But effective January 2024, it was reduced to 7.5 on the gross rent. It was reduced to 7.5 on what you call on the gross rate. Respond with a yes. Effective 1st January 2024, it was reduced to 7.5. So again, a landlord comes to you, he has houses and is making, this landlord is making, let's say maybe, is making 2 million a year. How much tax should you be paying? You advise him he should be filing 7.5 per month. If maybe per month is making 500,000 times 500,000. Are we together? Residential. So this is the tax that person should be paying. 7.5 of the gross. Together, team, 7.5% of the gross. So that is what they should be paying. Lastly, the last category, as we wrap up on this and get the next question, that is August 2025. So we'll talk about now on number 3, all other residential. So we have number 3, residential. We have residential making 15 million and above. So you have residential that make over 15 million, that make what you call over 15 million, and all commercial buildings. Most of the buildings in town, commercial rental income. Commercial building to imply commercial. We call it commercial rental income to imply what you call commercial rental income. So if you have a landlord that makes over 15 million a year, and then you also have landlords who have commercial buildings, like the buildings in town, and is that true? The buildings in town, most of them are commercial. You'll find shops, you'll find salons, you'll find consultancy firms in it. How do you tax those buildings altogether? So we basically say that these ones are treated as business income. So these are treated as what we call as business income. Treated as what we call business income. So those also will be treated as business income. So for business income, you'll basically tax what we call the net rental. You'll tax what's called the net rental. You'll tax what's called the net rental income. You will tax what's called the net rental income. How do we get the net rental income? I have what's called the gross rental income minus allowable, minus what's called allowable rental expense, minus what's called allowable rental expenses, minus what's called allowable rental expenses together, minus the allowable rental expense together. So this will be treated as a commercial, those will be treated as a business altogether. If you are a business that has registered as a sole trader, you're going to be taxed on a graduated scale. If you're a business that has registered as a company, then you're going to be taxed at 30%. 30%. Is that noted? Tafadhali nipatie yes. Are we together? Are we together? We respond to the yes. So the big question would be, for example, in terms of rental, what would be allowable expense? Agency fee. Maybe they are under agency fee can be allowable expense. Caretaker salary, you can have caretaker salary. You can have caretaker salary. You can also maintenance, repairs, maintenance, and maintenance. You can also have it as repairs. Water and electricity. But look at water and electricity. And the one if paid by the landlord. Paid by landlord. When the tenants are paying for themselves, you cannot deduct it as expense. So we have water and electricity, but this was if they're paid by the landlord. You can also talk about investment allowance. You can create investment allowance. Like the wear and tear. You can have wear and tear. You can claim the wear and tear, IBD and wear and tear. So that is exhausted on that. Is the investment income perfectly done? Is that perfectly done? If that is perfectly done, to bonyeza yes. I want to pick a question, and I've already said it. August 2025, question, employment income was question. Was it question 2, 3, or 4? Yes, get for me that question. I want us to crash that question. So send the paper to the group. That is what I want us to do. Send the question to the group so that Mwalimu can have it. Send that question to the group so that Mwalimu can have it. Have you sent it to the group? Send it to the group very fast. Send that question to the group. Tafadhali to my Soliko group. Send the question to the group, kindly. Somebody send the question to the group. Kindly, very fast. We make use of that our time. So are we ready? Which question is that? That's question. That was question 2. Yes. So question 2. So I want us to be attentive. All that I ask for is attention. All that I ask for is attention. Are we ready? Can Molimo start? Can Molimo start? Are we ready? As I read this question, can I start reading the question? Molimo can start. So we're told there's a gentleman called Jamle Kwesonga, is employed as a chief financial officer. Jamle Kwesonga is employed as a chief financial officer of Speedway Limited. I hope you're there. Of Speedway Limited, a multinational corporation operating in Kenya, that is full stop. So they told that during the year ended 31st December 2024, he provided the following details regarding his income. He provided the following details regarding his income. He provided the following details, we'll say regarding his income. He provided the following details in the total regarding his income. So I hope you're at number 1. He received a monthly basic salary. He received a monthly basic salary of shillings 250,000 after deducting a pay of 95,000 per month. After deducting a pay of 95,000 per month. So number 1, the question is basic salary a taxable income or not a taxable income? Is basic salary a taxable income or not a taxable income? Is basic salary a taxable income or not a taxable employment income? So that's a taxable employment income. So whenever examiner tells you net of pay, look at net of pay. Mark this one. Net of pay. Please be very careful. So when an examiner tells you, because when you're subjected to taxation, we need to subject it as a gross figure. So if you're told net of pay, what should you do? You add to 50, you say to 50, you add back the pay. How much is the pay? That should be 95. So what is the gross per month? So when the examiner says net of pay, you add back pay, add back pay, add back the pay. So you add it back. So when you add back the pay, what are you getting? When you add back the pay, provide me with that. So what are we having? What are we having? Tafadhali, please give me. I should not be giving that answer. So that should be 345. 345. Per month, this should be the value. So the whole year times 12, what do we have? Times 12 for the whole year. Times 12 for the whole year. So what do you have times 12? For the whole year, we should be having 41,140. So all there. Are we together? In exam, you're not doing workings on the question. Tafadhali, you're not doing workings separately. You do workings in the question. Because I'm teaching, look at Emmanuel Kabi. If you have an exam, I'll just have this and put it there. But because I'm teaching, are we together? When I'll be revising, you'll see the shortcuts that I will be doing. Don't do working separately. Is that noted, Anna? If you do that, you'll waste a lot of time. So don't do that. So we've gotten that figure. This is for the purpose of teaching. So then, number 2, so being told that from January 2024, it was assigned with a company vehicle of 3,500 cc, which the company had purchased in December 2020 at a cost of 5.5 million. However, on 1st August 2024, the company we say that the company list a Land Cruiser, for him at a monthly hire of 80,000. At a monthly hire of 80,000. The leasing company had purchased a Land Cruiser at a cost of 4 million in 2023. So that information, this was information 1. I have information 2. So this one basically relates to the basic salary. So information 2 basically relates to what? We talked about it. Which benefit is this? Information 2. Which benefit is this? Information 2. Which benefit is that? We call it the motor vehicle benefit. Motor vehicle benefit. We call it motor vehicle benefit. Motor vehicle benefit. Understood. So I want to crack that. Can I crack that now? Understood. Is that motor vehicle benefit? You give me a yes. Encourage Mwalimu. Yes. We are living in a world that we need to encourage one another. We need to build one another, not destroying one another. We need to build one another. The only way that we're going to make it is that when you act in unity. There's something of power. That is unity. There's nothing as great as a class that is united. If you begin to revise together, work together, yes, it's okay, blessing. You'll catch up. So the two things here. The first scenario, the car is not leased. Are we together? The first scenario, the car is not leased. Are we together? There's a motor vehicle of 3,000 cc. There's a motor vehicle belonging to a company of 3,000 cc. This one was there for how many months? This was there for how many months? This was there for how many months? How many months? Is it 7 months? Let's confirm if that was 7 months. Was it there for 7 months? So January, we have January, February, March, April. Okay. Are we in agreement that that is 7 months? Are we in agreement that that is 7 months? Are we in agreement that that is 7 months? Are we there in agreement, all of us, that that is definitely 7 months? Perfect. If we are, so what do we do to that? How do we get to say that is 2% times number of months times the months times months times months times initial, we call it initial cost of motor vehicle, of MV. You compare with motor vehicle CC. You compare with the motor vehicle CC together. So we're saying 2%, so we have the 2%. How many months was that? 7. What is the initial cost of the motor vehicle? Initial cost of the motor vehicle is how much? Initial cost we're given as 5.5 times 5.5. Together. Is that understood? Kama tuna flow pamoja, you just give me a yes. Where is my... Perfect. So motor vehicle CC. When we say motor vehicle, use the first part. That is saloon car, hatchbacks. 3,500 cc. 3,500 cc. Motor vehicle ni ngapi per month? What is the figure per month? 3,500 cc per month over 3,000. That should be. We have 14. We have it as 14,400. But how many months times 7? Get for me that. 14,400 times 7. Negapi. So get for me the first one. So this is 100, 800. The first one is, get for me the first one. The first one Negapi. So you compare these two and get the higher. The first one is 770. So which one is the benefit that you're going to use? So the benefit that you're going to take is 770. Understood. So you compare the two and get the higher together. So that is what you have. So if you look at Tim, if you look at the next, that is from we have it from August. Motor vehicle is leased. So we say that if motor vehicle is leased, do we use the formula? If the motor vehicle is leased, we ignore, and we do what? Use what's called the lease value. What is the lease value of this Land Cruiser? Per month, how much was being paid? The lease value for this Land Cruiser, it was 80. So just for the other part, you say 80 times what? Times 5. What does Malibu get? 80 times 5. So this will be easy. We just simply work on it. So we have 400. We have 400. So that information is understood together. I hope we are together. So Malibu proceeds to additional information number 3. So on additional information number 3, we're being told that he lived in a company-provided house where he paid a nominal rent of 20,000 per month. The employer paid the rent of 90 for the house. So what is that? The employer paid a rent of 90 per month. What is that? Tafadhali. So how do we call it? That is a housing benefit. We call it housing allowance or housing benefit. In this scenario, we cannot get the housing benefit because this is a home company. So we get all the other employment income is when we get the housing benefit. So we say on that number 3, hold it there. That number 3, hold it there. Hold the number 3 there. We cannot get the housing benefit. We have to get other employment benefit is when we get the housing benefit. Is that understood? Tafadhali nipatie yes kama tumeelewana on that. Perfect. So then you proceed to additional information number 4. So additional information number 4. So we've been told that on 1st September 2024, he bought and moved to his own house. He bought and moved to his own house. Look up. He bought and moved in his own house. Are we together? Meaning housing benefit is there for how many? How many months is there for the housing benefit? We are not calculating, but as you read it, you understand a number of concepts. Housing benefit. So this house was given for how many? Because on 1st September, the examiner tells me that this person moved to his own house. So the housing benefit at the back of our mind, understand that this was there for 8 months. This was essentially there for 8 months. This was essentially there for 8 months. Tumeelewana? Perfect. So then to chambu another part. So he moved to his own house, financed through what you call a mortgage loan at an interest of 9%. And at the end of the year, the employer paid for him. The employer paid for him 200,000 relating to principal repayment for the year. So how do you treat that? What is that? So I'm being told that on 1st September he bought and moved into his own house, financed through 2 million mortgage at an interest rate of 9%. At an interest rate of 9% at the end of the year, per annum. At the end of the year, the employer paid for him 200,000 relating to the repayment of interest of the year. So what do you have on that statement? So that statement has given me one component. It tells me that the housing benefit is there for 8 months. When you're paying interest on mortgage, how do you treat interest on mortgage. How would you treat interest on mortgage? How would you treat interest on mortgage? How would we treat the interest on mortgage? How would you treat the interest on mortgage? How are we going to treat the interest on mortgage? Good people. Good people, how do we treat the interest on mortgage? How do we treat the interest on mortgage? That's allowable deduction. What about what the employer pays for him? If the employer decides to pay for him mortgage, is it a benefit? Yes, it's a taxable. So 200,000 repayment is a benefit. That's an employment benefit. You are supposed to pay 200,000 and the employer has paid for you. So this is a taxable employment benefit. So that's a taxable income. But for the interest on loan, we treat it as allowable deduction. Brand. For the interest on loan, we treat it as allowable deduction. However, part of mortgage that was paid by the employer, we treat it as a taxable employment benefit. Tafadhali bonyeza yes kama tuko pamoja. Tafadhali bonyeza yes kama tuko pamoja. Bonyeza yes kama tuko pamoja. Tafadhali bonyeza yes kama tuko pamoja. Perfect. So then I proceed to the next. I've been told that it was registered for a medical scheme and life insurance scheme on 1st August 2024, where the employer paid a premium. Of $350 and $210 respectively. The scheme was one non-discriminatory. So look up. I repeat, which one? Number 4. Awiko. You say, I repeat, which one? Number 4. So we say that on 1st September, he bought and moved into his own house through a mortgage of $2 million. So when you move to your own house, is there housing benefit? It means that housing benefit was only there for 8 months. That is the first statement. Housing benefit was only there for 8 months. 8 months. What do you mean by no? Anna, no inamaanisha nini? I'm just explaining something for somebody and you've told me no. What does no mean? I don't get you. Could somebody help me to help Anna? Anna has told me no. I was just helping somebody, but I've been told no. Yes, okay. Typing error. So when he moves to his own house first, it is basically saying that the housing benefit was there for 8 months. Are we together, Wiko? The housing benefit was there for only 8 months. 8 months. So we're saying that the interest that he is paying towards the loan is allowable deduction. But we're also being told that the employer paid for him, look up, the employer paid for him $200,000 towards payment of a loan. So mortgage repayment benefit is a taxable employment benefit. That's why I'm underlining 200,000 and I said this is a taxable employment benefit. Awiko tuko sawa. This is a taxable employment benefit. Give me a yes if you're together, Wiko. Give me a yes if you're together. If we are together, Wiko, give me a yes. Perfect. So then the next number 5, it was registered for a medical scheme and life insurance scheme on 1st August 2024, where the employer paid his annual premiums of $350 and $210 respectively. The schemes were non-discriminatory. So if you're told schemes were non-discriminatory, are those taxable employment benefit? If you're told the schemes were non-discriminatory. So when you say non-discriminatory, it was available to all employees. So if a scheme is basically available for all employees, then we don't tax together. I hope that is okay. So then we move to the next, that is number 6. We're told he received a gross dividends. He received gross dividends of $150 from a listed company, and 110 from Jijenge Cooperative Society. If an individual receives dividends from a limited company, dividends received from a limited company, how do you treat it? That is what I was discussing. Dividends received from a limited company. Dividends received from what you call from a limited company. How do dividends received from a limited company? So those are somebody to give me tafadhali. It's very interesting. When I get those answers from students, it means my work is done perfectly well, as opposed to me giving those answers. 15% withholding is what? No, 5% withholding tax is final. We say 5% dividends, 5% withholding tax is final. Are we together? So this is an income that is not subjected to further taxation. 5%, that is good a week. But if you just say 5% withholding tax is final. So we don't subject that to further taxation. Tumelewana. 5% withholding tax is final. We don't subject it to further taxation. The second part is dividends from cooperative society. So what do you say when you receive dividends from cooperative society? Cooperative society. So this is what you call non-qualifying. We call it non-qualifying. The 15% withholding tax is not final, meaning 110, this figure of 110 is going to be added to other incomes. Added to what's called other incomes. Added to other incomes. Is not final, meaning you're still going to add it to other incomes. Everybody with me? Liz, are we together? Liz, tuko pamoja. Liz, the two Liz, tuko pamoja. The two Liz, I hope you're together. Lillian, I've not mentioned you. I've said that, Blessing, when you receive dividends from a limited company, the 5% withholding tax is final. So we call it qualifying dividends. We call it qualifying dividends. We call it qualifying dividends, implying that the 5% withholding tax is final. So once we deduct the 5% withholding tax, we don't subject it to further taxation. Blessy tuko sawa? We respond with a yes, Blessy. Kama tuko pamoja. Perfect. I hope nobody has a question. The two Liz are okay. So then I've said that when you receive from cooperative society, then this is non-qualifying. The 15% withholding tax is not final. We still subject it to further taxation. So then we move to the next. We are being told that he received an entertainment allowance. Look up, entertainment allowance. He received what's called an entertainment allowance of shillings 180 during the year, out of which 100 was spent on personal entertainment, and the balance was spent on customer. Mark the word. So there's entertainment allowance, 100 was spent on him, then 80 was spent on customer. Which one is a taxable benefit? Are both of them a taxable benefit? Are both of them a taxable benefit? Which one is a taxable benefit? So we say if you spend on customers, see, that's business. Are we together? So what is a benefit? Taxable employment benefit is 100 that is spent on himself. Tuko pamoja? Yes, is 100 that is spent on himself. That is the taxable employment benefit. Kuna mtu ameuliza kitu repeat. Ni nani amesema mwalimu repeat? Awiko? I hope I've repeated for you that somebody said repeat. Yes, what is spent on himself, that is what you call a taxable benefit. So that is 100 entertainment. So then the wife invested, the wife had invested in foreign security, where she received 90 as foreign dividends. while receive 90 as foreign dividends. That's dividends from outside the country. Do we tax dividends from outside the country? Yeah. Do we tax dividends from outside the country? So that is exempted from tax. Understand that is exempted from tax. We don't tax that. That is meant to confuse you. But dividends from outside the country is exempted from tax. So then we look up on this. So we have been told something, number 9. His wife, he received a net rental. So rental, net rental. We call it the net rental. Call it the net rental income. So what is the figure for the net rental income? The figure is 1 point. The figure is 1.2 from residential property. 1.2 from residential property. He received that from residential property. From residential property. From residential property. After deducting the following: caretaker salary, mortgage interest, replacement of doors and steel, replacement of wooden doors and steel. We have purchase of CCTV camera. Then you have depreciation. So how do you deal with that? How would 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 you deal with that? That is residential. Residential. What I've just taught, how would you deal with that? Very interesting. Do you think we're going to, that is a taxable other income, taxable? Natalie, residential. Are they making over 15 million? Natalie, are they making over 15 million? If you look at that figure, are they making over 15 million? Look at that figure, Natalie. We say residential that make below between 288 to 15 million, withholding of 7.5% is final. Natalie, Evans, do you think we are going to put that thing anywhere? And the examiner was very clear. In most of the time, the examiner says rental income, commercial rental. But for this particular exam, it all said net rental from his residential property. Are we going to include that, Evans, Natalie? Nataka munisaidie. We were doing those things on the board here. So in a good way, I want you guys to be involved. So that thing is not appearing anywhere. Why? Because residential, this residential, do you think there's 15 million there? Do you think there's 15 million there if you had those figures? It doesn't even get to even 5 million, to even 3 million. Natalie, is that okay? So these ones we don't. This one was basically meant just to confuse you. So that item should not appear. Together. Understood. I think because I wrote it on the board, I have to read. I write it and read. So the next we're being told that we are being told that on 1st July, he was awarded 10,000 share options by his employer at a price of 5, while the market price was 30. While the market price was 30. The share had a nominal value of 20 shillings per share. 20 shillings per share. What is that? Yes, Blessy, quiz. Do you want to talk or do you want to type? Blessy, do you want to talk or do you want to type? Proceed. The time is yours. The time is yours. Yes. Do you want to talk or do you want to type? That is a gross figure. I've said gross figure is when you less are we together. Because if you have residential that's 15, essentially that is more of commercial. Are we together? That's a business. If you're having residential that make you 15 million and above, that should be a business. Together, Blessing. Let's see. Yes. Tuko sawa kila mtu. Are we together, all of us? Alan, are we together? Anna, are we together? Lillian, are we together? Emma, the two Emma, my representative is not here today, but I hope everybody's okay. So we move to the next. We're being told that on 1st July, he was awarded 10,000 shares options by his employer at a price of 5, while the market price was 30. The share had a nominal value of 20 shillings per share. So what is that? That is what's called a share benefit. Are we in agreement? That is a share benefit. That is what's called a share benefit. Are we in agreement? If you're given shares at a discount or given for free, it is a taxable benefit, and we call it share benefit. So how many shares were given? This gentleman was given 10,000 shares. 10,000 shares. Do we use the nominal value or the market value? Do we use the nominal value or the market value? Nominal value or the market value? Somebody to give me that. Musicho, okay. When you get tired, nothing comes to a person who gets tired very fast. Yes. You have to continue. You have to go and go. Yes. There's no way you're going to get tired. The energy that you have, that's the energy that you're going to finish with. So 10,000, 30 minus 5. So what is the share benefit? What is the share benefit? We can't change our energy. Our energy must be the same, regardless of how tired we are with. So what is the share benefit? 30 minus that, that's 25. That should be 250. Together, team, that should be 250. That should be 250,000. Not 25. Is it 25K? No, not 25K. 10,000 times 25. Are we cool? Yes, 250. Then we proceed to the next. We're being told that he received a loan. Look up. He received a loan of 6 million interest-free from employer. Interest-free from employer. Interest-free from employer on 1st July. While the market interest rate was 12%, the commissioner's rate was 9%. The commissioner's rate was 9%. So basically, if you have the market rate and the interest and the commissioner's rate, we use the commissioner's rate. But in this case, if you're given loans by employer for free, who is supposed to be taxed? We call that a fringe benefit. We call it a fringe benefit. So you don't even waste your time. Fringe benefit. If the employer, look up, who is supposed to be taxed is the employer. So a good student will understand that this one is tax-free benefit. I don't even need to capture it, tax-free benefit. So this one will not be captured on that. That's a tax-free benefit. We have to finish part 1. We're not leaving without part 1. Maybe a tax of income, that is a tax-free benefit. So you don't need to calculate. But if you're to calculate the fringe benefit, the fringe benefit will be the principal amount of loan, which can employer's rate, which is 9, minus the rate, which is 0. So the fringe benefit in this should be times what? You get the fringe benefit, but we don't need it because this is taxed on the employer, because that is taxed on the employer. Lease to Melawana, because that is taxed on the employer. We don't need that because that is taxed on the employer. Sawa. Natalie, we don't need that. It's still moving. So then we are told that on 15th December, it was gifted a holiday trip to Maldives worth $850 for exceeding company's performance target. So what is that holiday for performing? Is it a taxable benefit? Holiday benefit. Is it taxable? This guy was taken to Maldives for exceeding the company's expectation. Is that taxable? Emma Nyukabi, yes, that is a taxable benefit. That is a taxable employment benefit. Then lastly, lastly, he operates a consulting practice on part-time. This gentleman operates what's called a consulting practice on part-time, where he had 2.5, a revenue of 2.5. So that is consultancy. The revenue is 2.5. Consulting and the revenue is 2.5. Together. Consulting and the revenue is 2.5. So I've been told that after deducting the following expense, one of the expense that was deducted was office rent. Is office rent was it allowable expense? Was it allowable expense, office rent? Office rent, was that allowable expense? Yes. Sorry. We say before and before. So we are going to less this. We less the rent, less working, rent is 400, you less that. That's allowable. Together, team, we less that. Rent is allowable. Marketing and travel, we also less that. Marketing and travel, how much is that? 320. Tuko pamoja. Alan, tuko pamoja. Marketing and travel, we less that. That's allowable. Then we also have what's called salaries for staff. So we call it staff salary. That's 600. Tuko pamoja. So then we have the last one, purchase of office laptop. Is that allowable expense? Purchase of office laptop. Is that allowable expense? Purchase of office laptop. Is that allowable expense? No, that's a capital expense. We claim investment allowance. This one I know I'm teaching that topic next. That is the topic where we are going to. So that's a capital expenditure. We only claim investment allowance at 25%. So 25% times 280. Times 280. For this one, shika tu hivo, that's where we are going to move. 25% of 280, what is the figure? Shika tu here, we claim investment allowance. That one we are moving next. That is the next topic that I'm going to cover. So 25% of 280, what do we have? I'm saying shika tu venye iko. Yes, investment allowance, we're getting to those. So that's 70,000. So what is the net consultancy? What is a consultancy? What is a consultancy? The net. Give me the net. Give me the net value. Give me the net value. Give me the net value. So let's just, then you give me the net. Yes. So this is income that is subjected to further taxation. So we're done with those items. So I said, I want to do the first part, maybe the tax payable we can leave. Assume that employer did not deduct housing levy during the year. And part of the reason there has been a lot of inconsistency. If you look at 2024, why do you think that when you're touching on 2024, we don't touch housing levy? There was a lot of inconsistency in housing levy. But basically, we should be applying housing levy. In 2024, there's a time the housing levy was, there was a lot of inconsistency. So that's why in 2024, they were not touching on housing levy. Is that understood? So let me start that question together. Can I start the question? Tafadhali, we do part one. Compute total taxable income for Jamlik Wasonga. Perfect. Now, musichoke, good things come to those who are willing to move. I know you're tired. I understand. But I also understand that this journey is also not easy. We have to persevere. Yes. Are we together? I also understand that sometimes you get tired. But allow me to continue. So we call this gentleman Jamlik Wesonga. There's no mark for that. Jamlik Wesonga. Taxable income. We call it for 2020-24. So I start with the basic salary. Basic salary. So that should have been 250 plus 90. That was 90 what? The pay was 90, was 95. So times 12. What is the figure? 414. So this one you have to finish together. That is understood. So the next was her motor vehicle benefit. We have motor vehicle benefit. We did this. So motor vehicle benefit was 2% times 7 times 5.5. Then you compare with 14, 400 times 7. So the higher was, this was 100, 800. This was 770. So say the higher. So the higher was 770. Are these things understood? Tafadhali. Are these things understood? Tafadhali, kama tunaelewana, we just say yes. Are those things understood? Kindly respond. Otito, tunaelewana. Natalie, Emma, just give me a yes, kindly. I've said something. Yes, please. Let's just move. Are we together? Don't change because you're tired. Let's just flow. Then we have what's called list. We have list motor vehicle. So list, we use the list value. That was 80 times 5. So this was 400. Together, that was 400. So number 3 was housing benefit. We hold that housing benefit. Mortgage repayment benefit. Number 4 was mortgage repayment benefit. Mortgage. Call it repayment. How much was it? Mortgage repayment benefit. How much was it? Give me that. How much was the mortgage repayment benefit? How much was the mortgage repayment benefit? 200K. 200K. So we flow. Those are other income. So we had the next entertainment allowance. Entertainment. How much was entertainment allowance? How much was it? Entertainment was how much? Just to know that you are awake. 100K. 100K. I'm not talking about other incomes. Then we had what we call the share benefit. We had the share benefit. Share benefit. So for the share benefit was 10,000 into bracket 30 minus 5. The share benefit was how much? 250. Together, that was 250. The share benefit was 250. Then we had what we call the holiday benefit. Holiday benefit. So how much was the holiday benefit? That was 850. How much was the holiday benefit? 850. Together. Is there any employment benefit that I've not included? Employment benefit that has not been included? Is there any employment benefit that I've not included? Is there? Tafadhali, respond. May God give you the grace to continue, give you the strength to move on. Yes. Is there any employment benefit that is there that I've not included? So quiet means that there's not. So we get the employment benefit. Add for me those. Give me the employment benefit. Add for me those. Kindly. You're the guys that I need. Wait first, Alan. So we are talking about, we want to get the housing benefit. The reason why I'm not using other incomes. So that's 60. Is there anything that we've left? Look up if there's something that we've left. Kindly. I want you to check keenly. Is there anything that we have not put here? Is there, just check that keenly. Check that keenly. Is there anything that we have not put there? So check this kindly. So look up. So look up on it. It was registered. Tim, check this. It was registered. Are we there? I want you to check this. Look up. Look up, Tim. Additional information number 5. Are we there? You are not able to see something. Additional information number 5. Look up, Tim. Respond with a yes if you're there on additional information number 5. Give me a yes, kindly. So it was registered for a medical scheme and a life insurance scheme where the employer paid. The scheme was non-discriminatory, not life insurance. Are we together? Are we together? Look up. No, there's a life insurance, not the scheme. Life insurance. There's what you call the life insurance. Somebody was not able to see that. Are you seeing that? So the scheme is non-discriminatory, but you're not told that in life insurance is different from the scheme? From the scheme. Together from the scheme. So that is to 10. But to 10, look at that question to 10, respectively. This is per annum, are we together? Annually. So remember from August, that is to 10, times what? How many months? That was from August. August to December, August, September, October, November, December, times 5 over 12. So get me that, times 5 over 12. That was annually. So annually, get for me that, times 5 over 12. Get that. Tukosawa team. I'm saying to 10 times 5 over 12. The scheme is different from life insurance. Nyokabi Tukosawa. On Tito Tukosawa. I want us to respond if you're together. We together, a team. Alan, are we together? Yes. Are we together? Anna, Blessy tunaelewana. Emma, Meshak Maingi, Natalie, Ontito, respond if you're together. Evans, are we together? I hope you're together. So that's 87. 87,500. So the scheme is different from insurance. Perfect. So then you get the employment, call it employment benefit. So give me that employment benefit so that we get the housing benefit. so that we get the housing benefit. So give me that very fast. Provide that for me. So what is the figure? I just add that too. So that's 67. We have it as 67, 97, 500. So look at housing benefit should be 15% times employment, 797, 500. How many months was there? It was there for 8 months. Do we understand here? Kindly. Tunaelewana mpaka hapa? Why am I introducing? The benefit was there for 8 months, not the whole year. Tunaelewana? The benefit was not there for how many? How many months? 8 months. Together. Kindly respond. 8 months. That's why we have 8/12. But how much was the rate? The monthly rent was not 90. So the market value should be 90 times 8. 90 times 8, that should be 720. So what about this 15% times 6,787,500 times 8/12 times 8/12? 15% times that, what do we get? 15%. Emma, tuko sawa. After Natalie, there's Emma, the two Emma. Are we moving on perfectly well? The two Emmas, are we in sync? Perfect. So then for me, 15% of the employment income times 8/12. What are you getting? So that's 679,750. 679,750. So you pick the higher. Is there his own contribution towards rent? Was there an amount that was being deducted? So being told that this person was being deducted how much? 20,000. It was being deducted. Look up on additional information number. It was being deducted housing 20,000. He lived in a company provided house where he paid a nominal rent of 20. So you less his own contribution towards rent. His own contribution towards rent is 20K times what? Times 8. That should be 160. So which one is the higher? 720 minus 160. You pick the higher out of the two. So 720 is higher. So 720 minus 160. You pick the higher out of this. 679, 750, and 720. So the higher is 720. So this 720, you less his own contribution towards rent, which is 160, 20,000 per month. So 20 times 8. So what do we have as the housing benefit? Give me the housing benefit. What do you have as the housing benefit? So we have it as 560. So at that point, we get what's called the gross. We get the gross employment income. Gross employment, call it employment income. So what is the gross employment income? Add this, 67, 97, 500 plus 560. What do you have as the gross employment income? What do you have as the gross employment income? What do we have as the gross employment income? So give me as a gross employment income. You are the guys I'm waiting for. That should be 73, 57, 500. 73, 57, 500. So then you say less allowable deduction. Allowable deduction. So the allowable deduction, this is mortgage. Call it mortgage interest. Call it the mortgage interest. Call it the mortgage interest. So look at where we have the mortgage interest. So he took a mortgage on 1st September, he moved through a mortgage. So the mortgage interest, that mortgage was 2 million. Interest was being paid at how much? How much was the interest? Interest was being paid at how much? Interest was being paid at how much for that mortgage? 9%. So 9%. How many months was that? How many months? That should be 4. This was paid 4 months. For that year, that was Then you compare with the set limit. A set limit, you compare with the set limit. We know that from September to November, that was 25. So we have 25 times 3, that is 75. So we have the set limit. From September to November, that is 75. Debt, it changed to 30,000. So the set limit for this is 105. So get for me the mortgage interest. 2 million, 9% times 4 over 12. So 2 million, I hope you've understood the set limit. So the set limit in 2024, until November, it was 25. So September to November, that should be 3, that is 75. However, in December, the rate changed. The rate changed to 30. So that's why I have a set limit of 105. So get for me the mortgage interest. 9% times 2 million times 4 over 12. Tafadhali. I think you have rushed. I think there's a rush. So the person getting 70, that should be 60. So you compare the two and you pick the lower. So what is the lower of 105 and 60? The lower should be? So the lower should be 60. So we have 60. That is the lower. Are we together? So once you let that, you get what we call net. We call it the net employment. The net employment income. So what is the net employment income? So less than 60. You pick the lower out of that. What is the net employment income? Tafadhali, get the net employment income. Get for me the net employment income. So get for me the net employment income. Less the 60. Less the 60. So that should be 72.95.97. 72.97. And we have it as 500. So we had other taxable investment income. So other taxable investment income. So we have dividends from cooperative. What was the name of the cooperative? The name of the cooperative was dividends from cooperative. The name of this cooperative was it was called Jijenge Cooperative. Dividends from Jijenge Cooperative. Is the figure gross? Is that figure gross or the figure is net? So these are gross. So you add it. If it was net, you would have made it gross. So that is 110. That is 110. Then we have the last one that we had as consultancy. So consultancy was 2.5. We can show the adjustment that we did for the consultancy. We can show the adjustment that we did for the consultancy. We can show the adjustments that we did for the consultancy. We have rent. Rent was 400. We had rent of 400. We had marketing and travel. Marketing, and we say call it travel. That was 600. We had marketing and travel. Then we have staff. Marketing and travel was 320. Sorry, 320. That was 320. Then we have salary staff. Salary staff. That was a figure of 600. Then we had the investment allowance that is for the computer. We had the investment allowance that is for the computer. For the laptop, that was 25% times 280. So that was 70. So if we deduct this, we were getting 1111. So then down here we have what we call total taxable income. Total taxable income. So get for me the taxable. 72.97 plus 110 plus 1,110,000. Get for me that. Lazima tumalize na tumemaliza. We are done and I'm happy. So add for me this and this. so that we get the total taxable income. Add for me that so that we get the total taxable income. Add for me that so that we get the total taxable income. So we have it as 85, 17, 500. So this is what you needed to do. How many marks was that question? How many marks was that question? How many marks was that question? How many? So we have the first entry 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So 16. So you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So 16 entries, we have 16 entries. So just say any 10 times 1, that should give you 10 marks. So if you have any 10 times 1, that should give you. Yes. Do I have the energy to continue? I did not give you a break. So that one we can finish in our next class. Blessing, we get you, but we can allow others to rest so that we do it in our next class. Please, you can also, as part of, because the semester is very short, look up team, because the semester is short. Are you getting me? Have you understood it, number one? Tumelewa, as we can do that in the next class. Have you understood this question? Perfect, nimeshukuru. So you can go to Mwalimu's YouTube. You can see some of the employment income that are there as part of revision. Your Cpa Odongo, you do more assignment there. Go to that YouTube account. You check what is there. You can see some of the questions that are done extra. Are we together? So we finished the part that is remaining. We finished the part that is essentially remaining. We finished the part that is remaining, that is the next class. So in the next class, I'm starting on investment allowance. The next topic that I'm going to do is investment allowance. Investment allowance. We call it the investment allowances. That's what I do. But go to Mwalimu's YouTube. Make sure you go there. You check what has been done there. You also follow. So I want to say that God bless you and God bless our class. Our class is ended. Asante.
to make up for that time, because for us, we are so much keen and sensitive about our timings. So let's do what we can do, and I'm very much confident that we are going to learn and learn best. So without taking much time, we are on measures of central tendency under descriptive statistics. And last time we had taken a sample problem. I wanted to know if we were able to obtain the values of F3 and F6 in that particular problem. As we go to the second measure, which is median, we will go to the second measure of central tendency, and that would be median. Maybe as we go into that, I would like to find out if we manage to find the value of F3 and F6 in our problem. I know you recall the particular problem. Okay, someone says it was not possible. At least that is a very sincere feedback. Who tried to determine the value of F3 and F6? We want to build on that understanding of finding the value of F3 and F6 in that particular problem. Otherwise, our objective is median. I would want us, like I suggested last time, we'll be relating much of our understanding to the past papers said that we are able to move very quick in this area. Maybe as a point of reference, said that we know exactly what we are talking about. As a point of reference, let me refer us to the particular question. It's just necessary because it will make even the next objective I'm about to explain, median, to be easier. So can someone remind us about the year and the question number in the chat box? Just type for us the question number I'm referring to. Must have been 2025, March or something. March 2025. April 2025, thank you. Question 2B. April 2025, question 2B. Let's try to look into it. We can jointly look into it together. It will form the basis of our understanding. It's going to form the basis of our understanding. Now, I'd like to know, is there anyone who attempted and was not able, or rather managed to get some values? It's always good to know, yes. So, Marianne, what was the value of F3 and F6 respectively? The value of F3, F6 respectively. For the purpose of this, I want us from our end, everybody to have access to the question paper, April 2025, question 2B. April 2025, question 2B. That's where we are. So kindly, everyone to access that. Marian, did you get the values? You may type. Kindly type if you managed. No. So I think let me have a quick review of that, because like I've said, it would still form the basis of what we are supposed to discuss. So in the interest of time, I will be guiding us on that understanding. Then we go to the next objective. So April 2025, question 2B. I hope I got to it. So we can have a quick review of that. I've seen members were unable to get it. So maybe today, before we get to this, let's review that. Everyone should be at that point, sales range. These are sales range. And the frequencies, corresponding frequency. The sales range and the corresponding frequencies. Those of us who had done this, I know you have got a clear view of what this should mean. That 40, 40 to 50, 50 to 60, 60 to 70, 70. There is 70 to 80, 80 to 90. And that was the last one. And the corresponding frequencies are given 8, 12, F3. These are in order F3, 2018, 2018, F6, 10, 7, 10, and finally 7. Probably, and because of our objective today, we shall be using the very problem to help us understand the remaining measures of average. But let's correct it together. One thing we were informed is that the total frequencies here is 100. And we needed to start or begin from the understanding of the formula for computing arithmetic mean. So to compute arithmetic mean for grouped data, we begin by stating clearly that our arithmetic mean denoted as X bar throughout will be using that particular formula, that X bar for group frequency. This is what we call the group frequency distribution. So the X bar would be given by the sum of Fx divided by the sum of frequencies. Now, we needed to obtain the value of X, whereas frequencies is the F. We need to obtain the X values, and then we are going to find the frequency that's the corresponding X values. So our summary table should appear as such. So X is the midpoint, and the midpoint is obtained by adding lower boundary plus upper boundary divided by 2, which in this case, correspondingly, we managed to obtain 15, 25, 35, 45, 55, 65, 65, they are in order, 75, and finally 85. If you do your workings, this would be the corresponding midpoint values. So the midpoint X we are obtaining when we add the lower boundary plus upper boundary divided by 2. So that we need to confirm if 80 plus 90 divided by 2 gives 85, it should be. So with the midpoints obtained, what did we say? We know the formula. That's why I'm beginning by stating the formula. So we are guided by the formula for arithmetic mean grouped frequency distribution. And that is why we are coming up with the summary table. So from here, I would want to go back to the question because we needed to interpret. So we are told this company collected data of monthly sales over the past 100 months. The data was grouped into 8 classes, but 2 frequency values, F3, F6, are missing. The mean sale is 48.3 units. So this mean sale is defined that the mean sale is 48.3 units. So that was defined, 48.3 units. So with the defined mean sale, we needed just to work out our fx values so that correspondingly, again, since we are reviewing this together for clarity, yeah, so the mean, let's see our workings. We can always obtain our workings. I'd like to guide that. So we've got 120 being 8 times 15, 300 in the order, 35 F3. I'm not assuming, but doing the multiplication literally. F3 times 35 gives 35 F3. Then 20 times 45 gives 900. 18 times 55 gives 990. 65 F6. Then 750 being 10 times 75. And then finally, 85 times 7 gives 595. So what did we need to do here? We are supposed to obtain the sum of fx. And if I go by that, that is 420 plus 900 plus 990. We'll be confirming plus 750 plus 595. So accordingly, the sum of fx gives me 3,655 plus 35 F3 plus 65 F6. Look at that. If you are to obtain the sum of fx, then it would be given as defined here. That 3655 plus 35 F3 plus 65 F6. Now, what do we need to do with all this? Please, let's understand. We needed to obtain 2 simultaneous linear equations, and I said that before. So let's derive the first one. The first one should be given by the total frequencies. Total frequencies being 100 would imply that if we added the frequencies here, we need to equate to 100. Therefore, I would clearly work it out. Did someone work out the sum of these frequencies? Okay, someone is helping me here. Let me get to that. Thank you for the image. Let me get it. Let me run to that image. The image shared, so that because it is a continuing understanding, so we can easily look into. You need to check into that. Let me try checking out. There is this image. Oh, let me check on it. There was apparently, let me just do it. My vision is not very clear, but because we are doing together, there is no harm. Let's see. So this would be 20. We can clearly see 20, 40, 58, 68, 68, 75, I suppose. So the first equation should be derived from the frequency column. That's 75 plus F3 plus F6 must be equivalent to 100. That would be our first equation. 75 plus F3 plus F6 equals 100. And we have derived that from here. This is 20, 40, 58, 68, 75. So if we have 75 plus F3 plus F6, it is equated to 100. Therefore, F3 plus F6, I've been able to see that from the image shared is equivalent to 100 minus 75. F3 plus F6 equals 25. And that is equation 1. So the first equation states F3 plus F6 equals 25. Let's just follow it. So with that first equation, we can be able to derive equation 2. And to derive equation 2, we need to use, in order to derive our second equation, we need to use the sum of fx as we obtained it here. So our sum of fx accordingly states that 36, 55 plus 35 f3 plus 65 f6. So how do we go about that? Now look at it. We needed to derive it this way because we know the sum is 36. 3655 plus f3 plus f6 divided by 100. I hope we are following this. Should be equated to 48.3. I want to repeat that. We have stated our formula for obtaining the arithmetic mean. The formula states arithmetic mean is the sum of fx divided by the sum of frequencies. We know the total frequencies is 100, and we know the sum of fx is as obtained here, the last column. So if we go by this, we cross multiply. Let's just follow. Take note of equation 1. Take note of our first equation. So we want to derive the second one. By cross multiplication, we'll have 3655 plus f3 plus f6 is equivalent to 4830. We are multiplying 100 times that. 100 times 48.3 gives 4,830. When we collect the like terms, sorry, it was 35. It is 35 F3. Sorry for that. This is 35 F3. It remains to be 35 F3 plus 65 F6. Let me adjust that. 35 F3 plus 65 F6. That is 35 F3 and the other one is 65. 65 plus 65 F6. So it comes to collecting like terms. We'll have 35 F3 plus 65 F6 is equated to 4,830 minus 3,655. So when we take 3,655, the other side of the equality, it becomes a negative, and therefore that should give us, it gives us a value of 4830 less 3565, 36 less 3655. So this is 1175, our second equation, equation 2. So far, I'm returning the table because we would want to use it for the median. Now, and of course, mode. So, accordingly, we have been able to derive a linear simultaneous equation from the information given. One, we obtained from the total of frequencies that whenever we added the total frequencies, it should have been equated to 100. Gave us F3 plus F6 is 25. Now, from the formula of arithmetic mean, the sum of Fx, accordingly we can see it here, all over the sum of frequencies, which is 100, should be equated to the given mean. 48.3 is given in the problem. So we have to see that clearly, that 48.3 was defined in the problem. Hence, the resulting equation is 35F3 plus 65 F6 equals 1,175. Can we solve that simultaneously? Yes, and that is what we were asking ourselves. So by simultaneous, let me make it a bit clearer because we have the two equations where we can see. Let me just, I hope we are following those who are not able to. The first equation, the order doesn't matter, but let me bring it here. F3 plus F6 from our workings was equated to 25, and that was the first equation. So can we solve the two simultaneously? Let's see. This is continuing understanding. So by simultaneous, we can eliminate. As always, we said we can always use elimination method or any other method you prefer. Don't forget that we could still use matrix algebra to solve that. You could still use substitution method. But now in this case, let's solve it by elimination method, and I'd like to eliminate F3. So suppose I multiply equation 1 by 35. I'm eliminating F3, so I'll multiply this by 35 and multiply equation 2 by 1. So when I do that, the resulting equations would be 35 F3 plus 35 F6 is equivalent to 35 times 25, 35 times 25, 35 multiplied by 25 is 875. This gives me 875. Then this is remaining as it is since we are multiplying by 1. F3, 65, F6 equals 1175. By elimination, F3 is eliminated. Then we have got negative 30. Negative 30 F6 being 35 F6 minus 65 F6 gives negative 30 F6 is equated to, it is equated to 1,175 less 875 is equated to 300. we divide both sides by negative 30, negative, this is a negative value, sorry. Yeah, negative 30. So negative 30, they're negative because 875 less that is negative. Accordingly, the value of F6 is supposed to be 10. So in that problem, F6 value is 10. Who managed to get 10? Somebody shared an image here. I don't know if you managed to get F6 to be 10. Kindly confirm. It is not mandatory. If you did not get it, maybe you are now able to correct yourself. If you didn't find F6, I want to believe you are now able to correct yourself. You should be able to correct yourself to that extent. So with the value of F6, now as always, we can obtain the other missing value from any of the original equations. And that's why if I pick equation 1, since F6 is 10, I know we have followed. Let me pick the first equation. The first equation here, originally, you take the original form. So equation 1 stated that F3 plus F6 equals 25. Accordingly, F3 plus, substitute the value of F6, 10, is equivalent to 25. F3 should be given by 25 less 10. Hence, F3 equals, that is 15. So take note, our F3, 15, F6, 10. And you can prove because the total frequency was 100. Hence, if you come back to the workings, we said 75 plus the other value of F3 plus F6. And so we now obtain that it is 15 F3, 10 F6. So that is a very clear understanding of that first measure of central tendency, which is arithmetic mean, and we have seen the application of the same. Now, we are going, remember why I said it becomes a very good example. Let's look at part 2, which is part of our objective today. So part 2 stated, compute the median cells. And that's why I was returning the values so that we don't over-repeat. So we are going to understand how do we compute the median values. Can I emphasize that when it comes to measures of course, descriptive statistics, it's about understanding the formulas, and you can be sure you will always be tested in this. There is no single series where this is not tested. The only the only interesting bit of it is that you must be conversant with all descriptive statistics because they are always combined. And that's why if you look at the example we've picked, it's not just asking a single concept. It is asking so many concepts. Measures of central tendency. I can see measures of spread or dispersion here. I've also seen there is a measure of skewness. So by the time we are done with this, we will be able to answer all parts of this question. And I think it was a good one because suppose we want to go through this understanding, we'll use the same example to help us get the idea. It does not matter, but what is important is to understand the formulas. So I'll go straight into median using the very values, but I would want us to give it meaning first. Of course, from our previous studies. And without assuming, median is defined as the middle item. So in terms of meaning, we would say that median is the middle value or item, middle value when items are arranged. Whenever items are arranged in either ascending or descending order. Median is the middle value when items are arranged in either ascending or descending order. That's the general meaning of median. So it is the middle value whenever items of the series are arranged in ascending or descending order. Now, let's proceed to actually, I'm making the understanding more of summarized, but I know because again, I'll share with you the notes for reference. We are looking at the very critical aspects of these particular measures. Now, there are two types of data I may have to mention about this for understanding. When you talk about the statistical data or variables, we need to draw a distinction between two terms here. First is a discrete data. And then secondly is continuous variable or data, whichever terminology you want to give it. Continuous variable, where variable is the factor, of course, or rather it can be a data you are looking at. Now, a very quick example of what we say, if we look at our sales range indicates a continuous data which has been made continuous. The range is continuous such that as you move from the lower boundary to the upper boundary, the other class or group begins with the previous upper boundary to the next upper boundary. So it is so continuous, and the idea of continuous variable is that it is a variable which takes into account all values within a defined range. Continuous variable will take into account all the values within a defined range. In real life examples, continuous variables will be such factors like, if you are talking about height of a person, the time of the day, temperature, weight of a person. So these are continuous variables because they will assume or take any value within a particular range, within the defined range. So that it is possible you find that an individual has got a height of, say, 5 point, you know how heights are defined. Majority of people on average are 5. So you could be a 5 point something feet. Yes, the moment someone hits 6, that individual must be very tall. Because on average, those who are tall are 5, I think beyond 6.6 or something feet. Anyway, the idea is that if you look at a continuous variable, you make it take care of all values within a defined range. Simply put, continuous variable or data will even take care of decimal points. For example, our sales range of between 30, if you consider this one, 30 to 40, can be defined that it will take care of all sales values, including if you are making a sale of, say, these values were in thousands, I suppose, from the original problem. So the sales range, oh, they are in units rather. So the sales range are in units. So it could have been possible, depending on the nature of the product, that you have a product which is, say, 35.8. So 35.8 is taken care of within this range of 30 to 40. Now, anyway, when it comes to discrete variable is that which will consider whole numbers. A discrete variable is that which is defined by whole units or whole numbers. That is to mean we don't have intermediate points or decimal points. For example, in our class, we can only say we are, say, 5 people in a class. There is no way you can refer to members of a class as, say, 5 and a third. There is nothing like that. So when you are referring to individuals, that is a discrete variable. Persons can only be discrete. You either have 5 people in a class or 1 person in a class, but we cannot say we have got 1.5 people in a class. Why did I mention about these 2 types of variables? It is because in our meaning of media, this meaning majorly applies when dealing with discrete data in most cases, which is not grouped frequency. Because when you have discrete data, ungrouped discrete data, precisely speaking, let me illustrate. You don't have to say much. So this is what I mean. An example of ungrouped discrete. You may not have to take this down, but just view. When we have marks scored by a student, so these are student scores. A student scores in, say, 5 subjects. The scores by a student in 5 subjects. Arbitrarily, this student scored 50 in one, 65 in another, 48 in another one, 70 in another paper, and finally, this student is scoring 63. So this is what we are defining here, the middle value when items are arranged either in ascending or descending order. You can obtain median when you do what we have stated up here. I know someone can be able to see that. So the median value will be obtained when we either arrange in ascending or descending order. And I think you can view that clearly from your end, that if we did so, probably in ascending 48, 50, let me just pick it up. So we've got 48, 50, according to our hypothetical values, 63, 65, and finally 70. Hence, our median value, 63. That is the middle item when we arrange. So I said, because of our main objective, we are going to focus on continuous data rather than discrete data. But discrete data, that is what is expected when finding median. So let's look at our case. Remember, it is part of the problem anyway. So before we answer it, we need to understand the following. Recall, we would want to obtain median sales using the same problem. So first things first, and we may have to, okay, I normally insist for the purpose of this topic that we use my formulas, because you will find so many different versions of how these formulas are stated from different references, they may mean the same thing, but some will be confusing. So I normally prefer that we use my symbols because they communicate the same thing. So that's why I want to define median for grouped frequency distribution like this as follows. That median should be given by lower class boundary LCB plus the bracket of, I will explain, N. I will explain N plus 1 minus 2 minus CF for cumulative frequency divided by frequency, big bracket, multiplied by I. At least this one we must clearly see. Everybody should clearly see that formula as I've stated it. Median should be given by LCB plus N plus 1 all over 2 minus CF divided by F multiplied by I. And please, in case of any clarification, use the chat box so that I don't ignore any concern as we proceed. Now, if this is the formula, I said I'll give it meaning, and once we get the interpretation, that would be all. So, in this formula, we need to understand where, of course, LCB, lower class boundary. So the LCB here is lower class boundary. It is very specific. Lower class boundary of median class. Actually, this is the key to understanding this. The median class. Lower class boundary of median class, that is LCB. In some cases, you can simply use L. I only made it better. Lower class boundary of median class. The CF is defined as cumulative frequency. Cumulative frequency of class preceding median class. CF is cumulative frequency of class preceding median class. F is the frequency, these are very specific values, frequency of median class. Frequency of median class. And therefore, I is called the class interval. The term class interval is alternatively referred to as the class width. Whether we say class interval or class width or class size, we mean the same thing. I is the class interval or the class width or class size. Now, with this formula, first of all, let me explain this component. N plus 1 all over 2. Let me explain that component, and please, we can all understand it once and for all. Now, why we bring in N plus 1 all over 2 is where you notice that the total frequency or the number of items, put in other words, is odd. We are saying for the odd number of items, odd, we all know what is odd, not divisible by 2. For example, where N or frequency is 43, that would be odd number of items. So anytime you are working out median and you notice that the total frequency is odd, then we need to incorporate N plus 1 all over 2. We need to have that in mind. So why we say N plus 1 all over 2 is where the total number of items is odd. Meaning, In our case, since the frequency is even, 100 is even, in the formula for median, this component will take n all over 2, where number of items is even. And it is n plus 1 all over 2 for odd. So n plus 1 all over 2, we will use n plus 1 all over 2 for odd number of items. So please, as you'll be working out median, as you'll be working out quartiles, this is an extended understanding, by the way. Understanding the formula for median would make it simpler for us to talk about quartiles. We'll come to that. Deciles and even percentiles. But this is the rule. Odd number of items, even number of items. Why is that key? That is very important because if we are referring to our formula, reference is made to the median class. Reference is made. There is no way, if I may put it in a simpler way, there is no way you will get the correct value of median unless we know the correct median class. Because this formula is clearly centered on the median class. So let's now solve it. We want to answer using, we are not changing the question. It's still the same because part 2 of it, compute median sales. Now to do so, since we had obtained our mean, let me do away with this. Maybe from your end, you will have to make the adjustment. Extend the understanding. This is very critical that you have to obtain cumulative frequencies. So what we are introducing in our table, maybe from your end, just extend, or you may insert, have a column for CF. CF standing for cumulative frequencies from your end. And we are now much better because we have the actual value F3, actual value F6. Now, the cumulative frequencies are worked out 8. So this is how we work it out. 8 plus 12 is 20. 20 plus 15. 15, recall, is F3. So 20 plus 15, 35. 35 plus 20, 55. 55 plus 18 should be 73. 73 plus 10, F6 is 10. So 73 plus 10, 83. 83 plus 10, 93. 93 plus 7, 100. So the last item of cumulative frequencies simply tells the total frequencies. And our total frequencies was 100, hence it is confirmed by the cumulative values. Cumulative values confirms that our frequencies were correctly worked out. Now, this is a step-by-step understanding. Now, with our cumulative frequencies, let's now obtain the median class. We are answering the problem. So, for us to answer our problem, we need to clearly state what is the median class. Our median class, when I say class, it could even be referred to as a group, should be given by n all over 2, 100 all over 2, n all over 2, even, and that gives me the 50th value. So median item should lie at the 50th value or item. What do we do if it is obtained as such? You come here under cumulative frequencies and we look at the cumulative frequency value where 50th value or item lies. So accordingly, at 35, 35 is less than 50. The next value is 55. Therefore, we conclude, that is 1, 2, 3, 4. We conclude that the median class, you don't have to do this. I'm doing such that we can view. Our median class is the class of 40. It is the class of 40 to 50. So the median class is the class of 40 to 50, as identified from this working. Now, once you've identified that, we can now substitute in our formula and clearly state that our median, let me do away with this because I've defined such that I just substituted the formula. So our median, in this case, our median should be given by lower boundary of the median class is 40. That's why I did this, such that we see the median class. So we have 40 plus the big bracket of n all over 2. Already we've worked out, you know what we have done. We are not using n plus 1, but rather n all over 2 was 50. Cf, cumulative frequency of class preceding. So it is that cumulative frequency of class which comes before this one. So it is minus 35, and that is standard. Divided by f is frequency of the median class. That's why I was saying these values are very specific. You cannot just place any f value. It is referred to as the frequency of the median class. And accordingly, I said, unless we get the correct median class, we can never get the right median. Multiplied by class interval, 50 minus 10, that is the class interval. Upper boundary minus lower boundary, that is 10 in our case. So our median should be 40 plus. I can say 50 minus 35 is 15. 15 divided by 20. So we'll have 15 divided by 20, 0.75. 0.75 times 10 is 7.5. So our median conclusively would be 40 plus 7.5, giving us 47.5 units, because it was median cells. So that answers part 2 of our question. The median cells would be 47.5 units, 47.5 units. Median cells, 47.5 units. Allow me, in the interest of time, if you go through that question, part 3, determine the first quartile. Part 4, determine the third quartile value. 5, determine the quartile deviation. And then lastly, determine the quartile coefficient of skewness. According to our plan, the last part of that question should even come towards the tail end of this unit. And I would want to request that we'll be answering it then. For now, allow me to talk about the last measure, and we'll use the same example. The last measure of central tendency is mode. Allow me to define mode. I'm going to define mode. I want to define mode, and this is quite interesting. You need to note mode. I'm sticking to our very example. So let's define mode. Recall, I've just stated it would be necessary we adopt our formulas for uniformity. So mode refers to the most frequent item in a series. Mode. It is the most frequent. Mode is the most frequent item of the series. In other words, mode is that item which will appear several number of times than others. It appears most frequently. However, in my approach to computing mode, group frequency data like the one we have, and that's the most important thing. So we need to define our mode as follows. Mode would be given by the lower class boundary plus the bigger bracket of lower class boundary plus the bigger bracket of f minus fa divided by, I said we adopt my approach, 2f less fa less fb, big bracket, multiplied by I. I would want to repeat that. The formula for mode states as I've written it. Let's adopt this. Our mode will be defined by the lower class boundary of model class into f frequency of the model class. I'd rather write them so that in the interest of time, we are able to clearly understand these components of the formula. So in this formula, where, because that is the most important thing, once you have this, you can even proceed to answer it. So this remains to be, let's not confuse, lower class boundary of model class. Now reference is to model class. We have to refer to model class and not median class. Take note of that. F, I hope we can see clearly F. So F is the frequency of model class, frequency of model class. FA is frequency of class preceding, frequency of class preceding model class, frequency of class preceding model class. FB is frequency of class. Can I use the word below? Class below or succeeding if the other one was preceding. FB is frequency of class below model class. And members, this is all we need to understand. I remains to be the class interval. I remains to be the class interval. So can we answer it using our very example? And we are not adding another column here. The good thing about mode, take note, in the case of mode, we are making reference to frequency of class preceding. Let's take note of those key but simple understanding. Because I've seen some candidates getting challenged because they still work out mode, but you see them struggle with cumulative frequencies. Whenever you're talking about mode, don't introduce cumulative frequencies. It is not necessary. Actually, it is not required because the formula, and I said we adopt my approach, clearly states we are looking at frequency of class preceding model class, and FB is frequency of class below model class. Now, my question is, as we come to, as we near to conclude, can someone give me the model class by typing sales range in the chat box? Somebody to give us the model class, because that is what we need to know. Who will define for us the model class? Someone to define for us the model class in the chat box. Please remember we are using the very table, the very question to determine mode. So the question we are creating, you can have it from your end. What was the model cells? What was the model cells? So you can have it as such. What was the model cells? What was the model cells? So who is typing the model class? Who has gotten for me the model class, please? Someone to give us the model class. That one should not be a challenge, members. As far as I'm concerned, it should not be a challenge. What would be the model class? And remember, like I suggested, we are looking at these concepts as we have a good understanding. We will not really have to struggle. Thank you for this. Thank you. That is well done. So the model class, just in case someone is doubting, the model class coincidentally is still the median class. Why do I say so? 40 to 50 is the model class because it has the highest frequency. So I would want to urge, in the case of grouped frequency distribution, you identify the model class by looking at that group or class with the highest frequency. It is this higher frequency of 20, since the rest were below 20, giving us the model class to be 40 to 50. Hence, with that in mind, and as we conclude, to be able to compute mode here, to be able to compute model cells, let's view it together. Our model cells should now be given by lower boundary of model class meant to be 40 plus the bracket of F, frequency of the model class, 20, minus FA, frequency of class preceding model class, frequency of class above or preceding model class is 15. So 20 minus 15 divided by 2F, 2 multiplied by 20, that is the 2F, less FA, 15, less FB. FB, frequency of class below, and therefore our FB will be 18, bracket, multiplied by the interval 10, being 15 less 40 is 10. So, in as much as, in our case, the model class and the median class were the same, when you now compute the values, you will get varying values because of the formula. So I can see that gives me 20 minus 15 is 5, divide by, so that would be 40 less 15. So I've got 40 minus 15. 40 minus 15 is 25. 25 minus 18 is 7. So basically, we have 5 divided by 7, 0.71 to 2 decimal places, 0.71 to 2 decimal places, multiplied by 10 is 7.1. So our model cells would be 40 plus 7.1, approximately 47.1 units, according to this problem. So according to this problem, we have seen that our model cells would be 47.1 units. You can compare that. There is a slight difference with median cells. So with that particular example, and because of time, we are going to end there, since our next area of descriptive statistics would be measures of spread And when we look at the measures of spread, let's keep our example still as it is here. We will be able, the very question, I said, let us use it to the end for simplicity of reference. So we'll be able to answer part 3, part 4, and part 5. At least that one, and if all goes well, up to part 6 in our next class. And that is tomorrow, 6 p.m. So once again, I want to sincerely thank you for the patience, and at least with your patience, we have been able to learn. And I hope and believe that I will find it within my means to adjust for the minutes we lost. But you understand, it was not deliberate. The unfortunate thing that it has happened when we had a plan of reorganizing, and even that reorganization was not to disadvantage, but because of some challenges. But we are going to communicate to you, just like you are informed by Cpa Odongo. We will communicate to you. I normally say we are in this together, and please, if we are in it together, we must always have a consensus. We believe in consensus. And once we have consensus, then we work together. Because unless we do it together, we may not be able to achieve much. But I'm happy that we are a team. That is my greatest encouragement. And since we are a team, let's commit and all will be well. So thank you so much. And I want to wish you good night. Thank you.